Buying your first home is an exciting but stressful experience. There's a lot of misinformation out there.
The more money they spend, the more money I make.
Isn't that a conflict of interest? We hired you to help us.
In this video, we are going to talk about some of the myths and bad advice that you encounter as a first-time home buyer. First one, marry the house but date the rate. So you want to quickly dump your landlord and move from renting a house to buying a house of your own, but you're worried about the prevailing rates of mortgage, right? That's when you are typically likely to hear this from your realtor. Marry the house and date the rate. This phrase, marry the house but date the rate, simply means that you are only making a long-term commitment to the house that you love. But this higher rate that is bothering you, don't worry too much about it. It's only temporary. You can dump it as soon as rates go down. You can refinance. Again, the idea is buy the house that you love today, even if you have to pay a higher rate, and then seek to refinance and lower your rate in future. So get a different rate in future. Typically, the people who promote this concept are either real estate agents or lenders who clearly have a vested interest in you closing the loan today and buying the house today, so that they can make their commission. But there are several issues with this approach. It assumes that rates are going to drop soon, and when they do, you'll be able to refinance. Big assumption. Rates would drop soon? Will they? Who knows? If you look at history, in 1980, we had a similar problem when inflation was running rampant in the US. To control that, the Fed at that time had to raise the interest rate up to 15%. Even then, it took till 1989 and two recessions before the rates came down to about 9%. It took it 10 years to come from 15% to 9%. So if your realtor is telling you that you might just stretch it for a bit and the rate reduction is right around the corner, you might be in for some unpleasant surprise. The other assumption made by the proponent of this marry the house, date the rate is that you'll always be able to refinance whenever you want and when the rates environment is favorable. See, while it's probably true that you can refinance in future, it's not always possible. Jobs change, family situation change, economies change. Imagine, God forbid, if your personal situation changes that you end up with a divorce. You may even need to sell this house instead of refinancing the house. Anything can happen. So don't date the rate recklessly and end up with a spouse who is simply not going to leave but make your life miserable. Second myth is that you need at least 20% down payment to buy the house. This can frankly be a huge barrier to entry, particularly in a competitive housing market where prices have really gone up. According to a survey by LendingTree, around 41% of Americans who are home buyers believe that they need to save and bring in at least 20% as down payment. But in reality, there are many other loan options that allow for lower payments as low as 3 to 5% along with a PMI. This allows you to enter the market sooner if you need to and start building equity in your house. Just be aware that there will be additional cost related to PMI. See, for example, the regular conventional loans offered by everyone allows for a 3% down payment for a well-qualified buyer. In fact, I used that exact 3% down payment option to buy my first condo in Connecticut. And that allowed me to jumpstart my journey as a homeowner and as a real estate investor. Here is a video that talks more about that. The next bit is that you should focus only on the mortgage payment. See, if you just look at mortgage calculator, look at the monthly payment and say, yeah, I can afford it. This may be very enticing that you should put in the offer for that house. However, homeownership comes with several additional costs. First is property taxes. These vary according to location, but can add a lot of money on top of your monthly payment. Homeowners insurance. It's a necessary expense. You absolutely need insurance, but you do need to plan for paying for that insurance. And the costs are going up. And then there is maintenance and repairs. We all feel like our new house will always look like this, but keeping a home means constantly spending money on repairs and maintenance. I actually made a detailed video on the true cost of homeownership. I'll put a link over here if you're interested in watching that. Next myth. Home prices always go up. See, the housing market isn't immune to fluctuations. While it's true that historically home prices have generally gone up in the US, there have been and there can be periods of stagnation and even decline. So please don't assume that you will just have instant equity in your home. I actually believe that homeownership is a great way to build wealth. But it is also true that it's not a guaranteed moneymaker. It's one of the various methods that you should deploy as you try to increase your family's wealth. The housing market can fluctuate, or there can be unseen circumstances like a job loss, a weather event, major housing repairs. These can all impact your finances. The main mantra is that you should approach homeownership as a way to build long-term wealth, not as a get-rich-quick scheme. Myth 5. A lovely home is more important than its location. Location is crucial, the most important part of owning a home. The cheapest house on the market may not be the right fit for you if it comes with a long commute or limited amenities or safety lack thereof. On the other hand, a fixer-upper in a trendy neighborhood might look very tempting, but do consider the long-term costs. As a simple principle, when you're buying a house, look for these 3 things and make sure you're not over-compromising. One is commute times. If you need to commute long for your work or school and etc., it will add to other cost elements which you might not be thinking about today. School district. Sometimes people buy the house without thinking about school district because they don't have kids or they have smaller kids. But it becomes very, very important as you grow your family, and it may even force you to move down the line and get a lot of additional cost. So it's important to look at the right school district. And then of course the resale value. While the house may work for you today, always keep in mind that you may have to sell the house for either planned or unplanned events. So it's very important to consider the resale potential of the house while you're buying the house. Myth number 6. Find a fixer-upper and get instant equity. Those HGTV shows may show home renovation like a breeze, but the reality can be very different. DIY projects can be time-consuming, expensive, and can even lead to bigger problems if not done right.
Now they're running out of money and running out of time as the seasons change and rain is looming.
The stress has me vomiting every day.
So factor in all the renovation cost and then add some when you're considering a project like that. And make sure you have the skills or the budget to handle that. Myth number 7. You can time the market. You know what others don't. Be it stock market or the housing market. Trying to time the market is really a fool's errand. Market conditions are constantly changing. So trying to wait for the perfect moment to strike may actually mean you're losing out on opportunity. Focus on finding the home that fits your needs within the current market environment. Homeownership is the biggest vehicle to build sustainable wealth over a period of time. In fact, average homeowner in US became 40 times wealthier than an average renter in just last 10 years in the US. And do you know the most important data found in these studies? Historically, most wealth has been created by those homeowners who held on to their properties for the longest. So don't wait. Go ahead and get started on your wealth journey by buying the right house and starting to build equity in it. Check out this other video, it'll give you more information. Buying a home is a big decision. So do your research. Get advice from qualified professionals where required. But don't fall for these myths. By being informed and avoiding these common pitfalls, you will make smarter choices. And you can turn your dream of homeownership into a reality and not into a horror show. Let me know which of these myths you have heard during your own quest of buying a house. If you like this video, check out this other video from my channel. I will also appreciate if you can give a like to this video and subscribe to the channel. See you next time.